Hi there. In this video, we are going to look at the trade finance and real-world asset trio, including Hedera, Casper, and XinFin XDC. As usual, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. These are education content only, not financial advice. The weekly chart of Hedera is showing us that after a retest of the blue key level of 0.077 4 weeks ago, basically a level deeper than the October 10th tariff announcement date, it has been trying to stabilize around the purple key level of 0.089 and the red key level of 10 cents. It challenged for 4 consecutive weeks without success. The bulls try to go above the red line, but get heavily hammered back to the range that I just talked about. So that's what's happening in the macro picture. From a volume perspective, it has been declining back to the average we've got since December last year. All right, so that means there's no big commitment from either the whales or the bears. It's basically range bound. In terms of Wyckoff, it's within the mid-stage of the accumulation cycle, meaning the whales are continuing testing how many paper hands are left, trying to shake out using whatever news that comes out from the media. All right, what we need to see next is the price decline to, if you have been following me, you know where that is, right? The yellow line of 0.129. That's where the automatic rally set the trading range top for the accumulation cycle. That doesn't mean after challenging this with a bunch of white candlesticks climbing to that level with higher than average volume. Okay, something like this white bar or even this white bar. Just want to move to the right-hand side because I know the disclaimer may have blocked your view. So something higher than average. Then the price may retrace, checking out more paper hands before the whales let the price shoot to the next distribution peak. We can see what happened over here. Okay, the price dropped, automatic rally, sign of strength. You see these bunch of higher than average white candlesticks over here. And then price retrace and go up again, shake out a little bit more, go very deep before the real crazy peak came in. All right, that's the game that the whales are playing. Okay, you see these kind of big wicks from the top. That's not a good sign, at least for the short term. Okay, you see that lasted for another few months before the true peak comes in. Of course, the way I see it is that it's not just about the technical, right? The way I see it is that whether there are any news that the whales can sell to the market, driving people crazy. If there are a bunch of news lining up in the next couple of weeks, they see the opportunity and they're happy to let the price surge to the peak, only to, take out or cash out the money from whoever that jumped in at those peaks. Okay, and then eventually, without any positive news sustaining the market, that's where we are now. All right, daily chart. Let's see whether there are any price trend change coming. Last week, we talked about this uptrend support line within the bigger downtrend that started July last year. Okay, this long downtrend indicated by the light blue box. The price actions after our last session has clearly signaled that there's no uptrend pointing to mid-March. Okay, it has been over. We can take out that line. What's happening right now? Well, actually, let's get back to the line. What's happening right now is the price actually trying to retest the same level it has tested multiple rounds. So you see these bunch of candlesticks finding resistance at the level around 9 cent 30. All right, it has come down to test it near the end of February, beginning of March, and now we are back on the International Women's Day. Okay, so whether or not it can hold, some people say, hey, is this a double top or whatever that is? The key thing is this is just an intermediate level. it is not strong enough to hold it for too long. If really bad news comes in and the bulls or the whales are determined to drive the price to retest the blue key level of 0.077, like what they did back in the beginning of February. That's the level where the October 10th almost challenged as well. If we look back to what happened back in 2023-24 during those accumulation, the current level, if I extend the line, that's actually around the peak, okay, of those rallies during the accumulation cycle. Okay, so that's why there is an intermediate support around here. But the stronger support will have to come around the purple and the blue key levels. Okay? So don't be surprised given it is still within this downtrend. However, if you say, what if it successfully, or the pool successfully defend this yellow dash line? These are the dates that indicate potential price trend change. I just need to add one more over here, because that's where the yellow dash line crosses the ceiling of the downtrend. That's April 11th. Okay, so we've got 4 dates lined up in April when the price trade towards these tips of the triangle, depending on where it ends up, stabilizing above. Because if you look at what happened to the price over the past month, it went as low as the blue key level and as high as the orange key level, at least above the red. Okay, not touching the orange for an entire month, but still, I'll consider the range top is here, 11 cents 40. So I won't be surprised if it shoot up to the orange. So that's the best case scenario, that it breaks outside of the downtrend by the 16th in roughly a week's time. But the base case is somewhere along the red line and the yellow dash line. So that points to somewhere in early April. If the current situation leading to maybe stock market sell-off and people get, panic, drawing more money outside of the crypto market as well, then it's going to come down to retest the purple or even the blue key level. Then we have to wait till somewhere between the mid-late April before the downtrend confirmation, the downtrend finish confirmation can come in. Of course, for the case of Hedera, we see where it had gone to during the Ice Age period between 2022 to 2024. So I won't be surprised if it gets even lower to the green or the yellow key level, 5 cents and 4 cents. Right? Those are almost the worst case scenario for Hedera. Assuming Hedera is going to survive. All right. Next, Casper. Weekly chart. Again, continuing to seek the low, it has broken below the intermediate support of 0.003 that lasted for 3 weeks in February. This week, the volume is continuously dropping. Well, it has been dropping for 3 weeks already, so I hope that's a sign of stabilizing. Given the situation in the world and the economic data from the US is still not dropping too much, I hope that it indicates that it's near the end. Okay? Having said that, I talked about this just now with Hedera, right? If there's market sell-off, when people panic, that can get even worse. You can clearly see this downtrend, just from the weekly time frame, not even the daily. While we are looking forward to see higher than average volume comes in, pushing the price back to, the level around the green, where the automatic rally set the trading range top. Okay, we need that sign of strength to come in to indicate to us that basically people are willing to come back in and we are getting close to the next distribution. We're not there yet. Okay, daily chart is showing us this cruel truth. While we are getting close to the March 11th days we talked about last week, the confirmation whether the price is going to break outside of this downtrend, that started way back in the middle of last year, sometime in May, June time, much earlier than a lot of other altcoins that started in late July. It is still not getting a strong support, let's put it this way, around the level that we have drawn the lines. So supposedly the 0.003 should provide the support, but eventually it failed. I just want to move the line down and set this to 0.003. And this is the new intermediate support, currently lying around the 0.0029. Let's make it just lower, just 2.8. Okay, near the tip of this very first candle that came down to test this level. Assuming it's going to range bound over here for the next couple of days. Besides March 11th, we have this March 15th. So right at the point where we'll have the next session. So if the price continues to trade and challenge this 0.0028, by next week when we have this session, hopefully we will get an answer of whether the price is going to break outside of this downtrend. Just that we won't be able to get a confirmation on the same day I do the next session, because it's better to observe whether it's going to close outside of this trend instead of falling back on the very next day, okay? Or is it going to get rejected by the ceiling once again and seeking a new low? That's the unfortunate truth about Casper right now. Every time it's trying to stabilize this, something bad happens and then it gets a little bit lower. But that's the real test of paper hands and diamond hands, right? It's going through all these kind of bad news, you find out who are the true diamond hands. Okay? Now, let's get to XinFin, XDC. Weekly chart. Okay. I haven't brought in the text, but essentially what that is, let me borrow some text quickly. Buying climax, second test, PSY, automatic reaction, PSY last point supply, panic sell, preliminary support, that is. Panic over, the selling climax. They are too tight. Okay, I'll get this and this, and then subsequent tests and diamond hands, paper hands. Sign of strength. Okay, now go to XinFin. I'm going to just plug those in over here. All right. Selling climax. We haven't, or XDC hasn't, gone to the point of the middle stage test of the accumulation cycle yet. It is at best at the panic over stage. You see that giant candlestick, not candlestick, volume bar over here, right? Way higher than the average, more than double. And in terms of the shape of the candlestick, it's a cross. So that means the bulls and the bears exchange hands pretty strongly in that particular week. Usually, that's very close to where the panic over stage appears. All right? So, whales have gone in during this period, and that's where the panic over comes in. A lot of times that's the case. But that doesn't mean that's the bottom of the accumulation cycle. Because of the panic over stage, there can still be deeper tests, checking out the paper hands. What we need to see, or what we will see eventually, is an automatic rally. Not sure where it is going to set the trading range top yet. It can be the orange key level or even the yellow key level. And after that, there will be more tests back down to around the purple key level of 3 cents 10, okay, 0.031. And eventually, sign of strength. Price goes up with higher than average volume, re-challenge the trading range top. So it's still early for XDC. It has just came out from the distribution cycle, getting into the accumulation cycle. Look at what happened over here, okay? It came down, rally, test, sign of strength, trace back, a little peak, and then come back to quickly reaccumulate, and next cycle. Okay, so let's drag these over. These ones. That's the automatic reaction. Let's say that's the second test. That's the FOMO, definitely. That's the whales first selling. Okay. That's pretty much the big picture. Now let's get to the daily. We see this downtrend started from end of July last year. You can say it has been triggered since the 21st. So what we need to draw is, the downtrend channel box. We are way lower than the October 10th tariff announcement date in terms of the price. So let's make sure the tips of the candles are encapsulated. It is fine for the October 10th wick. Sometimes I'll give it a little bit of leeway for those crazy days, okay? Those outlier days can go beyond what the other lows have set. So sometimes I'll give this a go if it is like a day with crazy news that would trigger robotic selling. So now, besides the channel box, we need the center line. It doesn't have to cut the box exactly in half. It has to lie around where the most frequent candles, head or tails, happen within the channel. Okay? So you can see we have a little narrower, weaker half of the channel and a wider, stronger half. And the price, fortunately, even after the test on the 5th of February, it quickly climbed back to the stronger half of the channel. And what dates are being indicated over here that we may get confirmation that the price trend is going to finish, meaning it's going to exit this downtrend channel. Positive but stretched case is this March 15th, 1 week from now. Okay, when we get closer and closer to this triangle, if the price managed to go back to above the red key level of 0.035, then it's the decision time. Okay, whether the price is going to break outside of the channel or once again get rejected by the ceiling, as well as the red key level, it comes back down to re-challenge the purple key level of 0.031. And the next date plays to 29th of March. So both in March, and the 29th is basically the base case because the price is within range now between the red and purple, 0.035 and 0.031. When the price edges towards this tip, once again we get another opportunity to get confirmation of a price trend change. If, however, it comes back to the range where the beginning of February tested, meaning, maybe approaching the blue key level of 0.026, that lead us to at least to 16th of April. All right. So believe that's good enough for now for XDC in terms of these dates, because we'll definitely come back next week and see whether the down trend is getting over. In terms of volume, we get quite some fluctuations. Okay, but this one happened on the 3rd, on Tuesday. Look at the volume, it's very low. Okay, the price went up short above the red key level, and that's why it did not sustain. It hasn't been combined with high volume. The price got shot back down immediately the next few days. So pay close attention, because the way XDC is happening right now, you see these volume bars, is very different from the other two that we have covered. Those were like, a lot of them were pretty stable or more or less average, but XDC is just going through all these roller coaster peaks. And whenever these peaks happen, it means combined with the candlestick shape, it means different things. Okay, this one, while rising, it turns out to be a cross. It signals with this high volume, it's going to go to a different trend. And then it quickly comes to test again and rebound. The purple key level is actually where the trading range top of the accumulation low back in 2022 to 2024 was. So that's why there were quite fierce rebound. But if it really get rejected and continue to seek lower level, the blue key level of 0.026 would be somewhere I see stronger support comes in. Okay, worst come to worst, it comes down to test here. Look at what these lows back in 2024, as well as 2022-23, those lows stay at around the blue key level, and that's where the strong support comes in. Okay, definitely we don't want to see it testing the light blue key level of 0.022. But who knows, right? Even 2024, for one time, it came to test that level. So that still remain a possibility for XDC. Okay, so these are the trade finance and real world asset trio. If you are interested to access these sessions 2 days earlier, join the other members now. Here's another analysis for you over here. Thank you.